Welcome to TheoTrade. This is Don Kaufman. It's December 6th, 2024. 10 minutes to go to the cash close here on this Friday afternoon. The S&P futures are massively unchanged. The NASDAQ, however, continues its march higher. The Dow defecting to the downside, and well, the Russell kind of stuck in the middle with you. Look, we're going to cover an extensive amount here, of course, in the weekend update, but what I want you to know right up front, you have got a number of sectors that are defecting right now to the downside, leaving markets at a really critical crossroads. Let's explain that and much more here, of course, on this TheoTrade weekend update. All right, start with the S&P. As I was saying a moment ago, you know, they're, lackluster. The S&P is up 9. The entire week has actually been rather slow. I'm not going to tell you anything you're not aware of, but markets, all-time highs. I mean, literally the all-time high is 61.11, but there is really anemic volume, and that anemic volume is, for instance, right here in the S&Ps. I was talking about this in Wednesday night's video. Like, look at the S&Ps versus some of the recent volume. Okay. And in fact, there's one day that's really low. That's like a half a trading session. And we're barely doing volume above that half trading session. So the S&Ps are seeing incredibly light volume. So then you look around at like individual stocks. I just want to make a quick point here with something like Microsoft. Microsoft, even though it's booming higher earlier this week, doing decent volume, you look at like today, there's nothing. It's just completely dissipated. Apple, which is actually down a little bit today, look how light some of the volumes are. I'm talking like non-existent. Here we have Amazon. Amazon is like hitting all-time highs on, really diminished volume. Okay. Meta, there's a lot of news on Meta. This has to do a lot with TikTok, a lot of news on Meta. Its volume is surging, but as of late, again, it's not nearly what we would anticipate. Here we have actually NVIDIA, okay, starting to see some sell-side activity. There's no volume. There's no volume in the equity markets. There's no volume in the futures markets, okay? And I wanted to start with that because, all right, you have all-time highs and very light volume. But that's light volume in the S&Ps, and that's really light volume in the equity being stocks, right? But I'm going to throw one little caveat out there, okay? And the little caveat is, okay, if you took a look at the volume and the options marketplace, that might actually shock you because the volume in the options marketplace, this is the OCC report from last night. It's December 5th. And last night, we did almost 53 million contracts. You're like, okay, I have no idea if that's a lot or a little bit. Well, here, the December 24 average is 48 million and the 2024 average is about 48 million. So here, go figure. You're actually doing above average volume inside of the option marketplace, extraordinarily anemic volume inside the equity and S&Ps. What does that actually amount to? Well, a couple things. Number one, okay, it's very evident that the options marketplace is the cart kind of leading the horse, that the upward momentum that we're seeing in the markets right now, okay, is solely option marketplaces causing squeezes. And I'll give you a perfect example. If you look at something like Meta, which exploded to the upside. Again, this was news driven, but exploded to the upside. There's this tremendous amount of call activity that happens earlier in the day. The call activity, there's buy side in the call activity. The buying of calls causes the market makers to have to sell calls and buy stock and actually drive markets higher. There's complacency though. There's just not a lot of real buy side. It's just nothing more than hedging activity, if you will, against option positions that's driving this marketplace effectively higher. If you take a look at Tesla, which is, again, it's booming right now, okay, to recent highs, not all-time highs, it's booming though to recent highs. And it's doing it on very light volume. So it's not the volume there that's of concern. It's the volume inside of the option marketplace that's driving it. So the way to look at this, though, the option volume is all it's right here. It's like literally like today. It's now. This is Not like, anybody's like, I'm acquiring the stock for a long-term investment. Nobody's acquiring stock here for long-term investment. Okay. The options marketplace is actually catching fire, causing the stock actually to drive a little bit higher. It is what it is. But you have to recognize, okay, that in this marketplace, it's all what's right in front of us. Literally, people are trading for like the next hour. Okay. It's not what is interpreted by this. And people are looking at an all-time high. They're high-fiving one another right now. Okay, low volume, very, very anemic inside of the S&Ps, anemic inside of the stock market, especially when you're actually booming to new highs on light volume like this. It's all the options and nothing but the options. That call buying volume is through the roof. You look at the sizzle index here on Thinkorswim. A sizzle index is today's option volume. It's today's option volume versus the previous 5-day option volume. And we're still doing double the option volume specifically to Tesla today. If you look at something like NVIDIA is seeing a little bit of sell side activity. Its option volume is a little bit lighter out there, but look around some of the usual suspects like Microsoft today, listless. It's basically just, chugging along at normal option volume. It's getting very, very edgy out there. So it's all-time highs with very anemic volume, but the option volumes are above normal. I'll give you one other reason that option volumes are above normal. There's positioning in the options market, okay, to the future. This deals with SKEW. Now, let's cruise over to SKEW. SKEW, for those of you that are uninitiated, unaware, SKEW is literally at its all-time high. And what SKEW is like a distortion in option pricing. It's the out-of-the-money put implied volatility versus the out-of-the-money call implied volatility. I'm going to kind of water it down and look at spiders for just a second with you. Okay, so if we take a look at the spiders right now, and we literally go, like for instance, 28 days out, and we'll open up like 120 options in here, 120 strikes, I should say, and we cruise down to implied vol. Take a quick glance. The out-of-the-money implied volatility, pull up delta here as well, out-of-the-money implied volatility, like a 6 delta, 5-6 delta, is somewhere around 18%. So on the put side of things, we're looking at about an 18% implied volatility. Now we're going to scroll out to the calls. A similar delta in the calls, it's about an 8% implied volatility. So like, what does that amount to? Oh yeah, man, he's talking about like 18% vol and 8% vol. Just means the puts, okay, are being bought heavily. Puts are being bought. And to finance those puts, they're selling calls. So it's like the supply and demand dynamic, okay, where we're out there and we're buying puts like they're going out of style, okay, and to finance that, we're out there obviously selling some calls. Okay, that can be construed as heavy hedging activity. It's also one of the reasons the volume could be a little bit higher out there in the overall marketplace. There is a tremendous amount of hedging activity. What's the hedging activity? Well, they're buying puts inside of the SPX, and to finance those puts, they're selling calls. Some people might, construe that as a collar. Any way you want to put it, it's hedging activity. And hedging activity, it doesn't necessarily construe that the marketplace needs to be bearish, okay? But it does say, all right, it doesn't say that we are going to be bearish, or that we're going down, but it does say that the professional trading world, okay, is definitely, if you will, hedging their bets. And that's a way to read into it. So again, all-time highs, anemic volume, option volume above normal, because the option is literally the cart leading the horse. Option volume above normal, probably because people are hedging out there in a big way. Now, the VVIX, let's talk a little bit about the VVIX, the volatility of the volatility index. Where's the VIX of the VIX? Okay, it was showing signs of life today. It has kind of cooled off a little bit here into the close, but there is movement in here. So I noticed earlier today that there was actually some hedging activity, okay, persistent specifically to VIX. I dug in here a little bit. The VIX traded a lot of options today too. There's a lot of options trading in the VIX. This is something we're going to watch carefully, okay, into early next week. And it's, again, when you're looking just at SKEW and you're like, SKEW is literally an all-time high, meaning hedging activity is big, it's bad, it's but indifferent. Like the SKEW alone doesn't tell you much. Then you start watching very, very carefully, not for VIX to go up, but for VVIX to go up. Okay, there's the closing bell. What happened? Absolutely nothing. Anyway, the VVIX going up is indicative of more hedging activity. And the VVIX going up is telling you that traders are coming in and actually hedging using the VIX product itself. Okay, I don't see a tremendous amount about that. Like the VVIX was moving earlier today, but the interesting aspect is the VIX is trading some huge size too, like really, really big size out there. All right, so let's close that up. Now, as I was saying, okay, to begin with here, sectors have begun to defect. And it, in my opinion, really leaves markets at kind of a crossroads. Like when you look at this, and I want you to be as objective as you possibly can, kind of follow along, play the TheoTrade at-home game. So you can look at the spiders, right? And you can pull up a chart. It's parabolic. It's incredible, right? It's just almost 30% year-to-date basis. And people will look at that, and of course, oh, wow, it's amazing. Look at IWM. IWM is the Russell. Stellar, up almost 20%. Look at the QQQ, okay? This thing just, shot. It is now up some 30%. But what we're going to do is we're going to dig a little bit deeper. We're actually going to start looking at specific sectors, and we're actually going to go across the row over here, because what I want you to see, okay, is limited number of drivers in this marketplace. Like, I've been watching the advanced decline line, and even days that were up, the advanced decline line has been actually negative. Like on Wednesday, the advanced decline line was decisively negative with the marketplace up. My argument is a very simple one. All you have right now, okay, is this, again, game of musical chairs where we just pick a tech stock and we're like, okay, today it's going to be Tesla. What do we do today? We buy Tesla with everything we've got. And today was also Meta Day. Okay, while Meta was actually driven by TikTok news, but we'll drive that one up. And it's just a side order, if you will, of some Amazon. Nothing else is really moving. But we keep seeing these pretty consistent rotations. But what else is going on? Like if you look at the belly of the beast, okay, I'll start with, look at the Dow. The Dow saw sell side activity today. What's the Dow done throughout the course of the week? Oh, well, the answer is, have you looked at the Dow lately? I'm not a big proponent of Dow. I'm not. Okay, but it is interesting and representative that you'll recognize, over the last 2 weeks, the answer is absolutely nothing. The Dow is basically flat. In fact, the Dow finished this week lower. I don't think a lot of people even like the days of the trading floor, you walk off a trading floor, you wouldn't even know where the Dow was. But Dow is seeing sell side activity. The Dow is not the reason I said that markets are defecting over here. Nah, it's individual components. Let's actually start getting to it, the sectors themselves. So let's start with XLE. XLE is the energy sector. Is that defecting enough for you? Sell side activity. So the XLE, the energy sector, is getting smoked. This is 2 pretty devastating weeks in here, but this is a product that was actually up about 15, 16%. Now is only up about 7%. Just cut the gains in half for the entire year in the last 2 trading weeks. Let's move on. Let's actually move to the financials. The financials, which in a post-election world they led the buy-side activity. Look, they're defecting. They are down. They're definitely not out. And I want to make that clear. Like, this is not big, bad, and bearish. But were you aware that the financials were at the lower edge of the expected move this week? Because I bet you probably weren't, because most people are not looking at that. So now you have the energy sector smashed, 2 deviation move outside of expected. Then you actually have what? The financials, okay, broke the lower edge of the expected move. Meanwhile, the S&Ps, okay, are almost at the upper edge of their expected move. You're like, how's that even possible? Because the energy sector and the financials, they're pretty big. Let's continue on. The path to the dark side, right? Let's go to XLU. XLU, it's utilities. No, nothing exciting about utilities. Look, I didn't say anything was exciting about these. I'm just telling you that stuff is starting to defect. The XLU, it's the utility sector. All of them added up wouldn't equal like half of Apple. Who cares? At this point, though, there's sell side activity and strong. Smashed through the lower edge of the expected move. Onward and upward. XLB. Most people have no idea, never looked at XLB. Okay, it's materials. It's the materials sector. By the way, I wasn't trying to be like very sector specific over here. There's a couple of sectors we're going to look at that are not doing half bad. You do realize though the majority of them getting smoked. Look at the XLB, the materials sector here. Bring up auto expected moves, smashing the lower edge of its expected move. Okay, starting a little bit of a theme over here. Let's go look at XLI. Okay, industrials, sell side activity. How did it end the week? Well, it ended the week dramatically lower, outside the lower edge of the expected move. We having fun yet? Let's go look at healthcare. Now, I know people are going to be like a little, all right, healthcare had some news. There's no question about that. Okay, even before the news, there was some sell side activity in here. It just basically picked up. Take a look at it, right? It's big, it's bad, it's ugly. All right, there's some sell-side activity. Again, what happened in healthcare? It happened, but it's outside the lower edge of the expected move. It still did not negatively impede upon the S&Ps. Okay, now we're really going to get into it. Now we're actually going to talk about SMH. Have you looked at SMH? Before I even pull it up, SMH is what? Semiconductors. Where's semiconductors? Oh, all right, they finished higher. Not massively higher, but they definitely finished in line. Okay, that's in line with the S&Ps. So we're into tech right now. Then I want to switch gears once again. I want to cruise over. No order over here. I want to cruise over to the XHP. This is the home builders. Home builders, lower edge of the expected move. Last but not least, let's actually pull up retail. We can pull up X. Okay, so there's XRT. There's XRT. What is XRT? This is actually this is actually select retail. Okay. It is slightly higher, but I also wanted to pull up then XLP. Okay. By the way, there's a bunch of different retail. So this one is actually almost lower edge of the expected move. Like people, look, I could go all day long. Consumer staples, okay, almost lower edge of the expected move. Then you got XRT, which is just retail, which is slightly higher on the week. It's wild out there. When you start to put it all together, you got to look at the SPX and realize everything here right now hinges not just on QQQ. Everything hinges basically on what I've often termed the monsters of tech. And in addition to it, take a look at NVIDIA. The concern right now, when I talk about sectors defecting and maybe we're at a crossroads, even NVIDIA today saw some sell-side activity. And NVIDIA, it doesn't feel like it's itself. Okay, maybe it's getting a little competition from, Anthropic Steel with Amazon. Amazon's gone absolutely parabolic on that news. Amazon, that's your marketplace right now. This is your marketplace. Tie that into a little bit of Tesla, okay? And that's it, people. Side order of Meta in here. And then there were 2 or 3. We keep narrowing down the scope. You've got to watch this so carefully because this is reminiscent, again, of some big turns in markets. And this doesn't necessarily say that, you gotta see some sell-side activity or we gotta see some consolidation out there. Because I'm going to be honest with you, maybe the sectors that I'm pointing out come back to life early next week. Early next week's important, okay? The point being, and again, I was saying this last weekend, I'm going to say it again, don't just go into the end of the year thinking like, that's it. I'm going into the clubhouse. I'm out. I'm done. I'm going to make like my 30% this year. Okay. You're not in the clubhouse just yet. It ain't over. It ain't over. And the low volume, okay, in the market coupled with high volume in the options, a really high skew, sectors defecting, okay, all it takes at this point is one very, very minute, like exogenous event. You don't even know what it's going to be, okay? A little tweet out there from the incoming administration, sure, okay? There are geopolitical conflicts going on, sure. I can give you 20 different reasons. Economic data breaking next week, the Fed coming out the week after that. There's so many exogenous events that could happen that could absolutely rock this marketplace. You're not into the clubhouse just yet. Last, but definitely not least, the SPX. The SPX, well, it did what it was supposed to do this week, okay, to the point. It was supposed to move $67.43. You look at this, $67.43. It tagged it to the penny, people, to the penny. It's ridiculous. Yes, we backed off a little bit off that, SPX upper edge of the expected move. Nevertheless, hit it spot on week in and week out. Okay, this marketplace, look at the last 3 weeks. 1, 2, 3 hits in a row. Again, absolutely stupendous moves inside of the marketplace. Now, after we just had this $67 move, okay, this past week, what are we looking at into next week? Now, this is not set in stone yet, but we're looking around a $62 move. So now I'm going to just tell you, okay, I'll take the over. I'll take the over all day long. This couldn't be easier to state. Look, we have a $6,000 product. In fact, $6,100 product. And the expected move is right around $62. So what the marketplace is saying is that we're only going to move about 1%, just over 1% higher and or lower next week. Again, I will take the over all day long. Okay. I am a strong believer that this consolidation and volatility is about to be over. And as I said to you, there's so many people looking at the marketplace like, the Santa Claus rally is here. Okay. Yeah, Santa can bring some volatility as well. Think about it over the course of the weekend. Again, early next week, it matters. I think some of this anemic volume may come to an end. We're going to be watching VVIX very, very carefully, watching some of the volumes carefully, but moreover, right, how long can we really keep up this sector dance? Things are defecting right now. See what comes to life early next week. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.